Kyle, very good to see you. Today, we're going to talk through 3 financial planning and investment opportunities in a down market, which it is, of course, right now. In fact, stocks recently closed out their worst quarter since 2022. The S&P 500 and the Nasdaq logged their worst performance since Russia's invasion of Ukraine. So before we get into how to take advantage of this downturn, I do want to talk through what we are seeing, which is something we've talked about before, Kyle, the concentration risk that we are seeing in the S&P right now, which is basically 80% of the market's movement due to only 10 stocks. And if we wanted to see how that looks in a different way, this is the S&P's 1-month performance. And I want to talk about the Magnificent Seven, which have lost $7 trillion since the start of the year. But when we see this much red on the board, Kyle, what should we keep in mind?
Absolutely, Erin. The big thing that I want to keep in mind with this concept, and we were just talking to clients about this about a month ago, is that the 500 stocks in the S&P 500, you're seeing that right here on the screen, they're not equally weighted, meaning that not every stock plays an equal role in that performance of the S&P 500 index. And so therefore, it really is not a diversified portfolio in truth, I would say, because like we said, all that concentration in the top 10 names, that hit a record level. 37% of the S&P 500 recently, before this sell-off, was in just the top 10 names. And that is generally not a sustainable pattern that we can follow. And we've started to see a sort of unwind there beginning even before this sell-off that happened.
Mm-hmm. All right, so now let's talk through those tips then. Tip number 1 is to put your cash to work. While it may feel good to hoard our money right now, if we sit on the sidelines too long in cash, it is really detrimental to our long-term goal of building wealth.
And the hard part here is, where do you pick the bottom? Where do you find that bottom? And
Right.
Putting that cash to work is an important part of any plan, investment plan, retirement plan. And it comes down to the fact that you want to look and see how much you've got on the sidelines and how much you need in the rainy day fund. And the other part that we want to keep in mind is managing the emotions of investing. And this is what you're talking about, building up that cash reserve. Maybe you're on this emotional roller coaster that you see on the screen here. Maybe you're down, maybe around panic, capitulation, or despondency, maybe
Right.
at this point, and we've gotten there really fast. But generally, if we zoom out and we look throughout history and look back through time, times like these where emotions are really negative have been a good entry point, in part at least, to put some of that cash to work. And I think that we have opportunities out there in markets today because the framework of everything is not as bleak as it's been in other times where we've seen this level of selling necessarily.
All right, tip number 2, consider tax loss harvesting. How does this work exactly?
So this is a part of tax planning that we do here in the office. If you're not doing this in your non-IRA investment and brokerage accounts, you should consider looking into it and understanding it more. This is a good napkin finance visual of how tax loss harvesting works. You can look at some positions that are appreciated, high gains, maybe they're concentrated in your portfolio. And then you look at some positions that maybe have not done as well. And you can find an opportunity to rebalance your portfolio while looking at it from the tax loss harvesting standpoint. If this is a big deal to you, do the research. But you have to be careful that you're buying and selling the right things at the right time, because you don't want to trigger what's called a wash sale, where you lose that benefit altogether.
Right. Yeah. Some of these strategies are a little more advanced, including our next one, which is Roth Conversions. You and I have talked many times about the benefits of Roth Conversions, but why now specifically does it make sense to consider a Roth conversion in a negative market?
It comes down to how much of the account that you want to convert, or that you're targeting to convert. Right now, accounts, probably most accounts are down a little bit from where they were to start the year. And so that'll maybe allow you to convert a higher percentage of your account from a traditional IRA to a Roth. And there are also some strategies that are a little more advanced that you want to make sure you work with a professional on, where you may be able to journal or transfer the actual position, the shares from your traditional IRA over to a Roth, and allow them to appreciate and recover over there. You just have to be sure you've got the cash set aside at the end of the year, to cover the tax bill, of course.
Yeah, because when that growth happens, which we're hoping, as it has historically done, it will happen tax-free. So that can be very powerful. Kyle, if somebody wants to talk through any of these strategies with you, or again, just make sure that they have a financial plan that accounts for or even takes advantage of this volatility, how can they reach you?
Absolutely. The best way to reach us is through our website. That's firstcoastfinancialgroup.com.
Great. Kyle, thanks for your time today.
Thank you, Erin.